Eric, how are you, sir, today?
Hey, good morning, Craig. Thanks for having me on.
Do you want to narrate our F3 video or do you want to talk home delivery?
Home delivery is in my wheelhouse, so I'll stay there.
All right, you're not a professional voice actor, but let's talk about this report that came out from Armstrong Associates and the National Home Delivery Association, all about growth in the big and bulky and last mile delivery segment. What did you learn?
Well, it's interesting, as you know, last mile delivery, most people think of that for parcels and your home delivery for packages you get from Amazon and other retailers, and they drop it at your doorstep. But, there's this whole other market when you order bigger things like exercise equipment or furniture, and someone comes in a box truck and drops it off. And lots of times you don't want to deal with it because it's too heavy. So you have them bring it in the house, instead of dropping it at the curb, and then they install it. So that market's been growing a lot, especially since COVID. It really took off, and but then it's slowed down some since then. But so Armstrong and Associates did some survey and work and research, and they basically saw that the growth rate for the market was a little over 10% over the last 8 years or so. But now, between last year and 2027, they say the market's going to grow at about a 5% clip. So it's kind of slowing by half, and they attribute a lot of that to the housing market. That home sales have slowed, especially for existing homes, because mortgage rates are high, and people who, like you and me, who might have lower, bought homes a while ago with really low interest rates, might not want to trade to another house and get an interest rate that's 6 or 7%. And then, of course, the housing market's so expensive right now, so a lot of people are staying put, and that's just spurring a little less home turnover, spurring less ordering of furniture and things to upgrade homes that you've moved into. So that was kind of the big initial takeaway.
Yeah, I've got some real estate on the market right now, and just talking to the agents as just the general state of it, it's just not. It's not the same market. We hear that from folks in terms of that are in real estate, just how soft housing is. And it's not a surprise that last mile would be slow and the forecast would drop simply because of it.
Yeah, and then people are squeezed a little bit with the discretionary spending. Last year with the tariffs and so forth, a lot of the appliances are made of steel and other things that are hit by tariffs. But a lot of those costs have kind of normalized. So the big thing's kind of this kind of home housing market influence on the last mile delivery sector and e-commerce.
Yeah. There's an interesting, we won't have time to get into it today, but there is a full Sonar sit rep on the weak housing market and that impact that it has on freight overall. And it touches on a lot of the things that Eric was talking about regarding housing starts and new housing starts, and that there are more multifamily housing starts actually happening than single family housing starts, and then how that affects the flatbed market. And as you see, flatbed is strong, but you can also see that it still follows the same.
Yeah,
it tends to
follow a single family home starts. Did you get a sense, because I always heard the number 20% of the trucking market is directly related to housing. Is it any
certainly
observations?
Yes, certainly in flatbed. But then, yes, but that has been muted this year because of sort of all the industrial renaissance and the AI data center build out. So while you would think that would have much of a more of effect on freight demand, right, based on the housing market being so slow, a lot of that's been made up for by.
Yeah, the flatbed folks are not struggling at all. So Eric, what is the final conclusions on this in terms of, obviously the freight market is difficult for these last mile providers, not a super bullish growth area. What is the takeaway from here?
Yeah, I mean, the competition's really fierce. A lot of companies have moved into this space over the last, 5 to 10 years. And so there's, heavy competition, and, it's hard to differentiate yourself with more specialized, value added services. So, the report said basically it comes down to the people are going to win. It's going to come down to execution, not new fancy, services that you provide. So, and that means you need more AI driven technology that'll help you increase your efficiency and, provide that execution level with, route optimization, predictive ETA, computer vision, damage assessments and so forth. So, and then there's potentially going to be some consolidation in the sector, they predict, because it's expensive, especially in more rural or suburban areas, to provide this last mile service. So, getting some scale or a broader national footprint helps your economics.
Real quick, Eric. Go ahead, Julie. Do you have something?
I was going to say, how are you seeing this reflected in earnings of final mile companies like JB Hunt and others that have segments that do this final mile?
It's a small segment. It's a small segment of a lot of these LTL and truckload carriers. So I don't really have the breakout. It's a small niche portion of their business, but important.
So, Eric, real quick, non-domiciled CDL drivers, my understanding is that some of these, particularly smaller vehicle types, straight trucks, et cetera, is attractive to non-doms who have been put out of market. Is that showing up in any of the data that you read about?
I don't have any specific numbers, but that is a concern among members of the industry that, the regulatory crackdown, as in all other segments of the trucking market, is, shrinking the driver pool. Labor availability is a big concern going forward for these last mile, big and bulky providers. So, I don't have specific numbers on the pressure, but it is there.
Well, Eric, thank you so much for coming in. Unfortunately, this is a crazy news day, probably the biggest story to hit our news wires in forever. Stay with us.